Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. A lot has changed for Peloton over the last 3 or 4 years. The company became a hot stock during the pandemic as people were trying to work out at home, buying fitness equipment. But the stock really crashed down to earth when people started going back to work, demand cratered, and there was a cost structure there that was simply unsustainable for Peloton. But today, the company has really reshaped itself behind the direction of Barry McCarthy, who came from Netflix, has implemented a lot of the things that worked at Netflix at Peloton. So if you are still thinking about Peloton as the company that it was in 2019, 2020, I think you need to rethink Peloton itself. So I want to go through those changes here today. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And let's get to the announcement that Peloton made a couple of weeks ago. This is Peloton reintroducing itself for anyone, anywhere. Those words really say everything you need to know what's going on. Peloton is getting rid of the idea that this is a hardware company that also has a subscription service and just saying we are a subscription fitness company that can be accessible by anyone, anywhere, anytime, doing any sort of activity that they want. They highlight that here with more than a bike company. And then they introduced 3 different pricing tiers for their app service. This is a little bit different than the subscription that you would have if you have a Peloton device. That's still going to be $44. There's some features and integrations with the hardware that you have as a Peloton user. This is just for the app. So if you're using something like a smartphone, an iPad, an Apple TV, or a Roku, that's where you're going to get access to this app. So there's a free app, 50 classes, 12 of Peloton's modalities. There are 16 what they call modalities or types of workouts, everything from meditation to strength workouts beyond sort of the traditional things that you think about Peloton for. So 50 classes, a limited number of classes, but a pretty broad range. The Peloton One app is going to be $12.99 per month or $129 a year. And that's going to include thousands of classes, so a lot bigger library of classes across 9 modalities. And they go through those here: strength, meditation, outdoor walking, yoga, and others. So you can see there that this is more of kind of the add-on, the features that Peloton didn't necessarily serve a couple of years ago when it was primarily a bike class company. So I think the idea here is that these would be customers that are going to be coming into the Peloton family who never would have been in it before. Completely incremental new customers. The Peloton app Plus gets you a lot more access and also includes things like bike, treadmill, and rower. So here's where you would get access if you have a piece of hardware made by somebody else, but you want access to the Peloton classes. Again, Peloton is leaning into the fact that this is going to be a fitness content company, not necessarily just a hardware company. I wouldn't be surprised if in the future they start partnering with other hardware companies to provide their software and their subscriptions on those hardware devices. The idea for Peloton generally is to lower the barrier of entry into Peloton subscriptions. So lower some of the prices, broaden the offering, and increase your addressable market from maybe a few million people to a few 100 million people. The move here is really leaning into internet economics. It doesn't really cost Peloton anymore to serve their 3 million and 1th customer versus their 3 millionth customer. So you might as well add as many of those incremental customers as you possibly can, as long as you're adding them at a reasonable price and a reasonable acquisition cost. That's really the balance that you're playing. But the cost to serve those customers, if you're getting $12, $24, $44 a month, that's going to be a very high margin business. So that's really the way to think about this, is that Peloton's trying to serve everyone now, no matter where they are, no matter what price point they are in their fitness journey. I think the thing that really differentiates Peloton today from 3 years ago is now it has those 16 modalities. So maybe you get into biking for a while, and that's something that you're doing all the time for 6 months. Well, maybe you give that up and you want to get into strength. Peloton has classes for that. Or maybe you just want a diverse fitness routine and you want one of these different classes in any given day. Peloton has that as well. That's what I found to be really interesting. I've been a Peloton customer for almost 3 years now. And the reason that it's so sticky for me is there's something for everybody. So I really like where the company's headed. At the same time, Peloton is increasing its offering. It's steadily increasing its subscriber base. And companies that are trying to copy this model by doing a subscriber model are actually losing customers. That should be really notable, is that this is working. Peloton may actually have a winner take all market on its hand. And I think it's playing its cards really well. It's going to take some time to figure out whether this is going to be the kind of business that can 10x over the next decade. But I like where Peloton is headed. I like the strategy. And I think investors really need to rethink what they think about this stock. But what do you think about Peloton right now? Leave your comments in the comment section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.